It's The Loan Show on KSRO with George Adair. Call in with your questions now at 636-1350.
Bare naked, and thank goodness in another studio from me.
I'm glad this is radio.
Is it rude to say he has a body for radio?
He's not listening
He's
to
not
us
listening
anymore.
to me. I was told I have a face for radio, and that's kind of funny. Anyways, hey, this is George Adair. Thanks for tuning in to The Loan Show on KSRO. Hey, this is the show where we talk about everything mortgage and how it impacts your life and how to improve your personal balance sheet. I want your calls live in the studio. Please give us a call at 636-1350. 636-1350. It's so much better when you call, especially when you call sooner than later. That way we can get your questions answered in a timely manner. This is a 30-minute show. I'm here every Wednesday at 12:30. Tell your friends and family. We did a nice networking event at my office last night on the corner of 4th and E. Bay Equity Home Loans, where I reside more often than I reside at home. It's my place of work, and we have a great team of licensed loan officers there ready to take your calls as well. So anyways, here in the studio, live 636-1350, 636-1350. Michelle, did I tell you that I love HARP?
You do love HARP, don't you?
I do. I heard a CEO of another mortgage company say that he believed HARP was the biggest opportunity for loan originations in our generation. And what that means is it's time for Main Street to be able to benefit from some of the bailout money.
Yeah.
I'm going to talk a little bit different angle about HARP today. We do talk about HARP a lot. A lot of people need to turn to HARP because they got turned away from a loan modification. And HARP is not just for people that are in distress. A lot of people think, hey, I've got to be in trouble to benefit from these loan programs. And you really don't just have to be in trouble. Today's Bay Equity Jackpot Refi winner, which we'll announce later at the end of the show, he actually brought a bunch of money in to close his escrow. He's very financially sound, and he was able to take advantage of the HARP program because his house didn't appraise for as much as he thought it would. So HARP is not just about being in trouble. And that's what I want to talk about. When we hit the recession, which was really a result of the overinflated housing market and the lack of oversight on mortgage products.
Yeah.
You know, I was talking with an attorney last night at this networking event, and he reminded me about all the particulars of what we used to do with loan programs and how insane those loan programs were. People would, get a rate at 5 or 6% fixed for just 2 years, and then it went fully adjustable at 5 or 6% plus an index.
Wow.
So people came out of the gates in 2008 and 2009 having gotten their loans at the peak of the market. When their loan adjusted, coming out at 9% in some cases. Yeah, and
that sounds like irresponsible on both parts.
It was.
As a lender, as a buyer, you just got to be careful about all of that.
Yeah, and there's a lot of people that are frustrated. There's a lot of finger pointing that goes around, and it's been interesting how the acceptance of folks that had to go into foreclosure has evolved. Now, my dad used to have a saying. Well, I don't think this was my dad's saying. I think one of our presidents actually said this. And I may be wrong. You can call me and correct me if you want. Somebody said this, recession is when your neighbor's out of work, and a depression is when you're out of work. And today, so many people are in trouble with their house. And that saying is more like your neighbor lost their house and now you've lost your house. So the short sale market tried to help people recover from that. Loan modifications was a real failed attempt, HAMP. So what we ended up with today was HARP, and HARP is exciting. It's an opportunity for people to improve their situation utilizing government-sponsored programs in a way that have never existed before. Tightening lending standards is something that's sort of a misconception of the industry today. People think, oh, I can't go get a loan. Actually, you can qualify for a HARP loan if you've had a recent bankruptcy. If you've been late on your mortgage in the last 12 to 24 months, you could probably qualify for a HARP loan.
Really?
Yeah.
Huh.
And what we'll talk about in the next segment is the different outlets for folks that want to get a HARP loan. Where do they go? How do you actually get a HARP loan? You know, I mean, you can't just call me on the radio here and take a loan application.
Right.
Although I'm pretty quick at taking loan applications these days, I don't think I could get it done in the time we have for the show. So what we'll do is we'll talk about how to reach out to your local bank or broker or a mortgage bank like Bay Equity Home Loans to get your HARP loan started. I want to take your calls today, 636-1350. And again, 636-1350. I want you to call. I want to hear your stories. Tell me about how you have tried to improve your situation. Maybe your neighbor, maybe your family member, somebody you know. Let's share some stories. You know, I think you can get a sort of community response to the troubles that our neighbors have felt. And if you can share your stories, then, you know, here in this community on the airwaves here, we can talk about how to help other people that have been through the same story. It's really embarrassing. I used to have people who would come into my office. Excuse me. I'd have people who come into my office and they would say, here's my situation. I'm not making my payment anymore, and I can't afford it. It went up too much. It doubled or tripled or whatever happened to a lot of people. What do I do? And I used to say, gosh, well, first thing is you need a plan, right? And the plan back then was, how do you hunker down and how do you hedge against loss? How do you find a way to keep yourself from losing even more? A lot of people have families that were uprooted and they literally had to figure out what the alternative was.
Yeah.
Well, today we have HARP, which is a totally, see how nice that sounds.
Oh.
It's such a better option than walking away from your house. HARP is the alternative now. Today, somebody walks in my office and they say, gosh, I'm underwater. What do I do? Or my house, my rate is adjustable, or it's interest only, and it's going to change in a couple of years, and I'm scared that interest rates are going to go up, and I'm not going to be able to afford my home anymore. So what's my plan? Well, your plan should be HARP. More than two-thirds of everyone out there has a loan owned by Fannie Mae or Freddie Mac. So they should be looking at HARP. Not enough people are taking advantage of it. And they need to take advantage of it. And they need to look at their exit strategy different. Instead of thinking about default, instead of thinking about modification, think about HARP. This refinance program is intended for people who want to keep their house. If you don't want to keep your house, fine, walk away from it, and deal with the consequences. But if you want to keep your house and you haven't called a lender or you haven't called Bay Equity Home Loans to find out about your options with qualifying for this type of refinance, well, then you're just letting yourselves down. And there are people that are doing that. They're sticking their head in the sand. And that's just not the right response. And it frustrates me because I know that there's people out there that aren't looking at this program, and they should be looking at this program. Back in 2008, when the government started bailing out industry, we took greater than 50% ownership in some of the auto manufacturers. And we bailed out AIG. People are hearing this right now live on the radio, and they're probably cringing, and there's probably a frustrated experience going through some of these people's minds right now because it was insane. Remember the lavish parties and bonuses that were being spent at the expense of consumers? And the sentiment back then, for a brief 3-year ago history lesson, if you recall, was, how come Wall Street's getting bailed out? What about Main Street? I don't hear that word anymore, Main Street. But for about 2 years, all we heard was Main Street. Mm-hmm. Well, now, 4 years into this, Main Street is presented with an option. And it's at virtually no expense to the taxpayer. This is not part of the bailout. This is not part of TARP. This is the government refinancing loans that they already own.
So it's a modification through the government.
It's one way of looking at it. It's improving your situation through an actual refinance. And you can't get it if your loan's not owned by Fannie Mae or Freddie Mac anyways. So what you're doing is you're basically repositioning yourself with your loan, and you're doing it in a fashion that is at really no cost to the economy or the taxpayer, because the government already owns your loan. You're not getting new cash. You're not increasing the loan amount. You're just replacing it with a new loan. So that's HARP. And it's widely misunderstood as to what HARP is. People are embarrassed to call their lender. They're embarrassed to call us at Bay Equity. They're embarrassed to call a broker. They're embarrassed to talk about it. They shouldn't be. Again, in the third segment today, we'll talk about the jackpot, Bay Equity jackpot refi winner. And the fact is, the gentleman has hundreds of thousands of dollars in the bank. His appraisal didn't come in where he wanted it to or where we wanted it to. So we put him in the HARP program. He brought money in, he closed his escrow, and it was a perfect scenario. So those of you that are out there and you think that HARP is not the right fit for you, it's because you don't understand it. Now, granted, there's a lot of people out there that have tried to refinance with HARP already. Those people need to tune in, because we're going to talk about the HARP changes that have occurred on March 19th.
Okay.
And we're going to go to a commercial break right now, but I want you to think about calling us in here, 636-1350. Pick up your phone, dial 636-1350. Also, I want you to text the word HARP. That's HARP, just like the musical instrument, harp, to 41411. There we go. Lovely. Mellow. HARP. Hey, we'll be back in a couple minutes. Stick around.
To find out more about Bay Equity Home Loans, call George Adair at 707-583-8100. That's 707-583-8100.
Hey there, Sonoma County. If you're paying over 5% for your mortgage, or maybe you're underwater with your mortgage, you need to stop and listen to this message. I'm George Adair with Bay Equity Home Loans here in Santa Rosa. We're helping homeowners save hundreds every month and thousands every year. We're offering a fixed rate loan at 4.125%, and best of all, it's at 0 points. You heard me right, 4.125%. Fixed rate at 0 points. Call Bay Equity today at 583-8100. Don't delay. Call us today at 583-8100. We can show you how refinancing into a low fixed rate can save you thousands on your mortgage. Please call 583-8100 and call and ask about the new refinance program for homes that are underwater. The time for a low fixed rate home loan is now. Bay Equity is your home for loans. Call us at 583-8100.
30-year fixed rate APR 4.31. Licensed by the Department of Corporations, number 6053919. NMLS number 238915. Equal housing lender.
Everyone's been discussing it, that it's so scary. So this weekend, you plan to do something about it. Your heart's racing. You don't want to look. You turn around, and there it is. All your old furniture, just staring right back at you. Fortunately, Lazy Boy Furniture Galleries is having a huge Moonlight Madness sale this weekend. They've made their hours longer and their prices lower, so you can save on chairs, sofas, sectionals, lamps, tables, and more. Your room may start out scary, but they promise a happy ending, beginning with the Moonlight Madness sale. So come to Lazy Boy Furniture Galleries this weekend for big savings on incredible new furniture. It looks even better with the lights on.
Save 10 to 50%